We're here with Arkadi Kuhlmann, the CEO of ING Direct, and we're going to talk about a subject that is on many people's minds these days, the world of finance. Arkadi, thank you for being with us here. We'd like to know, you of course head of an important bank, in fact the biggest internet bank in the United States. What is different about ING Direct?
Well, I think probably the most important thing is that it really directly connects to consumers. If you maybe think about it, we've lived through this financial crisis, and I think now we're in a full-blown consumer crisis. Consumers really don't know, where they can deal with their uncertainty, where they can get leadership, where they can get comfort, where they can get some kind of trust built in the way things are organized. And because we connect with 8 million people in the country, we've been basically able to listen to their stories, get their direct feedback. We've been able to basically build sort of a trust in a transaction by transaction. Maybe it's a way of getting back to basics. And so people are looking for what they can trust and where they can trust it. And they're becoming much more discriminate about what is the truth and what is maybe fiction. In this new unregulated world we have when it comes to the internet, the question now is we don't have the kind of integrity and control over the information that we used to have when we were perfectly in a published world where everything was fact-checked and concerned. And the same thing is that in the financial industry, people are saying, well, what does your brand stand for? Can I trust that? Is this real or is this not real? And so they're either turning to the government or they're turning to brands that they know well, and they say, okay, these guys are walking the talk. There's no surprises. And while maybe that always had a role with the way people dealt on a retail basis, it's probably more important than it ever was.
So another thing that is outstanding for ING Direct is that there is a focus on savings, and that is something this country is not very good at, has not been very good. So why is that so important to ING Direct?
Well, I think we just finished our 10-year anniversary a month ago, and so we've been pushing that save your money has been a pretty strong line in finance. If you think about the American stage, everything is about spending, and so much a month. We've basically been saying, well, how about the conversation about savings? And so balancing your revenue and expenditures, trying to make sure that you don't fall off the edge financially is probably not such a strange idea today. It was a little strange 10 years ago. Yeah. But it's a bit like the way you would look at optimism. It is always assumed that you're optimistic. Why wouldn't you assume that you can handle your finances well? We've learned some tough lessons that maybe sometimes you can have a knock-on effect and things actually don't go as smoothly. And a lot of things about life are a bit unpredictable. So bringing out a message of savings is really a message about conservative principles which need to go hand in glove with the views about vision and optimism. Right, so it's sort of like a two hands, right? One is be optimistic and look for the future, which is the opportunity, the innovation. But the other hand is you have to have the basis right. You have to have the foundation solid. You can't build a house without a good foundation.
Yeah, and that of course is very true at large for the American economy at the moment, where the foundation is basically gone. And
exactly right.
And so, is this an example that other banks should follow to focus on savings and be far more outreaching to their clientele to make that happen?
Yeah, it is a very big question, and I'll tell you why. It is so easy to try to find scapegoats in terms of who's responsible. But we need to remember that the function of a bank is really oil in the economic machine. It doesn't create anything. All what it really does is it translates savings into loans. And that's really the time value of money. So people put their deposits in a bank. The bank takes those monies and lends them into society to help people create businesses and jobs and goods and services. At the end of the day, that has to work, like a utility, right? You have to be able to pay back your depositors, and if you don't, then there's an insurance program for that. And so really, it isn't always left to, well, it's a free market and the consumer should know better. I always like to use the example of the drug business. We can do a lot about drug addicts, and we can say, well, let's do education and let's do reform and let's do, prevention and a lot of other things. But at the same time, you have to deal with the drug pushers. I'm not suggesting that banks have that role, but they have a supplier responsibility. So if you say, look, I want the credit, I want to take that risk, I understand that you have the freedom and the right to do that, but I, as your supplier, have to basically be your counterbalance and say, are you sure you're not going over the edge? If you're willing to basically take this risk, is that a good calculated risk? Now, sometimes that pendulum swings too far, and we've seen that in the excess of people taking on too much as a whole, as a society as a whole, but also the pendulum going towards the other way, which everybody being too afraid to lend anybody anything. And it is key that for a bank and an economy, kind of swings in the middle, that it translates the appropriate amount of risks into the appropriate amount of responsibilities. Because at the end of the day, collectively, we're betting our own money.
Yeah. So the way you're describing the role of the bank, you see it far more, I think, as a service company rather than, as a finance company that's just dealing with money. You are thinking about the customer and how you can help the customer. So in innovation in banking for you is also more about to make the bank more like a fast food company perhaps than like a big building where nobody dares to enter.
Sure, absolutely. I think it's all about retailing, right? So do we have to become very efficient? Yes. Do we have to be innovative? Yes. We have to get our costs down like every retailer. But I think that retail banking is quite different than investment banking, where you can risk your capital. Think about the old days. If I wanted to invest my money and invest it in a ship, and the ship goes away for a year and comes back, and I share in the wealth, well, that's one thing. That's risk capital. But for most of us in society, in terms of retail banking, it is a utility service, and you are part of the community, and you are part of the social fabric, right? And you're not risking capital. You're risking deposit money. And that's quite different. I mean, risking your and my capital, it's our freedom. We can gamble it, lose it, but don't forget that almost all banks have 90% of what they're lending is really deposit money.
It's really someone else's money.
It's someone else's money. And we have 9,600 community banks in this country, which have a local responsibility. So I think there's a very big difference between the investment banks that we see perhaps in New York and the investment that is maybe done by community banks in small town America.
Yeah. You've spoken about your bank, ING Direct, as a disruptive force. Can you explain what you mean with that?
Yeah, there is a lot that needs to be done in banking to make it more efficient. And every other industry that you can think of that's retail focused spends a lot of time in trying to figure out how to market more efficiently, use technology more efficiently, find ways of distributing more effectively, whether that's in big box stores or whether that's online, right? And so banking, if it's to provide that same sort of service and responsibility, should basically try to change the game as much as possible. And people say, well, but it's a regulated business, we can't really do anything differently. Well, but we do have that with airlines, and we have Southwest. We do have that with books, with Amazon. We have it with Costco. We have it with all kinds of other retailers where they're trying to basically change the way we interact with the buying of goods and services. So I think for a bank to be relevant and to, for instance, work with other retailers or work with technology in another way, it is good to basically disrupt the way things are being done. And I keep thinking about all the bricks and mortar, right? I mean, we've seen lots of waves where the corners of most streets used to be gas stations, and then they turned to be bank branches, and now they turn to be donut shops. And there's a sort of an evolution of how the bricks and mortar change.
Yeah.
And the one thing that's never changed since 1604, and that is cafes. I mean, everywhere we need as a society to have a place to interact, talk, and have a cup of coffee, right?
Yeah.
And ING Direct has a few of those cafes. But aside from that, why shouldn't we disrupt the way retailing is done?
So can you describe to me finally what your ideal bank looks like? I mean, what is the best bank that you can be?
Well, the best bank, wow, that's a big question. I think this is sort of like pushing the frontier of thinking a little bit. I think if you think about it in the ideal sense, we would like to be at the right place at the right time to basically provide funding. For instance, we provide mortgages for houses, we provide loans for cars, we provide payment vehicles, right? And we take deposits. It'd be great if we could do that very efficiently so that we basically cause as little resistance in the model, if you will, right? In other words, it's inexpensive, it has high value, and it basically is a bit transparent, but also at the same time invisible. I mean, look, we're not sending people to the moon and we're not saving babies. We're just providing money. And so the least obtrusive we can do that. It's sort of like the way you and I almost think about electricity, right? I mean, you know it's there, you know it's powerful, but we can't really touch it or see it. It's kind of sort of ubiquitous in the sense.
Is the best bank an invisible bank?
I think so. I think so. I think so. It would be, because we need to focus on the things that really create value. I mean, look, at the end of the day, I want to have a healthy baby. At the end of the day, I'd like to be able to look after my grandparents or my parents or whatever. Those are 10 things that we can touch and feel, right? Money you can't touch. Money doesn't talk to you. Money is just a representative piece of paper that says sometime in the future you can get something for it. So if I am the provider of that, then let it be as invisible as possible.
Thank you very much.
You're very welcome.